Let's rewind to early 2025 when Ripple quietly made one of the biggest strategic acquisitions in its history. Hidden Road, a global prime brokerage that connected digital and traditional markets, suddenly appeared under Ripple's wing. Within months, it would be rebranded as Ripple Prime, signaling that Ripple was no longer just a payments company. It was becoming the institutional backbone for digital liquidity. If you've been following the series, you already know how Ripple built up to this point. Between 2019 and 2021, Ripple's acquisitions focused on engineering strength. Teams like Algrim in Iceland and Logos in London gave Ripple the technical foundation for what became on-demand liquidity. Those were the years of quiet infrastructure building. Then came 2023 when Ripple shifted focus from moving payments to storing them, acquiring Metaco and briefly pursuing Fortress Trust to develop institutional-grade custody. In 2024, Ripple made a decisive move by buying Standard Custody, securing a qualified U.S. trust license and creating the regulatory base that allowed Ripple USD or RLUSD to exist. If you missed those earlier videos, go watch them first. They lay the groundwork for what happens next. Because by 2025, Ripple wasn't buying startups anymore, it was acquiring critical financial infrastructure. Hidden Road wasn't another crypto wallet or small exchange. It was a global prime brokerage, a system that underpins how institutions trade, clear, and manage credit across multiple markets. So what does a prime brokerage actually do, and why would Ripple want one? In traditional finance, prime brokers sit at the center of institutional trading. They handle credit, collateral, and settlement between big players like hedge funds, banks, and exchanges. Instead of wiring money for every trade, institutions use their prime broker to manage those transactions in one place. It is what allows global markets to function smoothly. By April 2025, Ripple announced the deal, valued at roughly $1.25 billion. The timing was no accident. Ripple had just launched RLUSD in January, its institutional-grade stablecoin backed one-to-one by reserves at BNY Mellon. It had the legal trust structure through Standard Custody. It had institutional custody infrastructure through Metaco. The only missing piece was the mechanism that tied all of it together, credit and liquidity access for institutions. Hidden Road fit that role perfectly. Once Ripple completed the acquisition, Hidden Road was quickly integrated and rebranded as Ripple Prime. The name was intentional. Prime described both the brokerage function and the institutional tier of clients Ripple was now serving. Ripple Prime's purpose was to provide one unified interface for everything institutions needed: liquidity, settlement, and credit, all operating under regulated compliance. Think of it as the combination of a bank's back office, an exchange's liquidity pool, and a fintech's API layer, all wrapped into one system. Let's make this simple. Imagine you're a global investment fund. You manage billions in assets across currencies and markets. Traditionally, when you need to move funds between systems, you deal with delays and intermediaries. One custodian might hold your cash, another your crypto, and a third your collateral for credit lines. Ripple Prime replaces all of that with a single interface. You can deposit dollars into Standard Custody, tokenize them into RLUSD stablecoins, and instantly deploy them through Ripple Prime's network. No wires, no delays. Settlement happens almost instantly, and the entire process runs on infrastructure that's both transparent and regulatory compliant. This isn't science fiction. It's exactly how institutional settlement already works. Ripple just built it on a digital foundation. Here's where it gets even more interesting. Hidden Road didn't only handle digital assets. It operated across multiple asset classes, connecting crypto markets, FX networks, and traditional exchanges. That means Ripple Prime inherited a network already built to serve hedge funds, trading firms, and market makers around the world. Ripple didn't have to build those relationships from scratch. It simply plugged them into its existing ecosystem of liquidity, custody, and settlement tools. That move instantly elevated Ripple from being a payments provider to being a liquidity provider at the institutional level. It's the same shift that major banks went through decades ago when they expanded from moving client money to managing it. To understand how significant this is, you need to look at how Ripple structured its ecosystem by this point. By 2025, Ripple had 6 major divisions. Ripple Payments handled the corridors and enterprise remittances. Ripple RLUSD managed the stablecoin. Ripple Custody provided safekeeping through Metaco and standard custody. Ripple Treasury oversaw cash and liquidity management. Ripple X handled the developer and technology stack. And now Ripple Prime became the institutional brokerage that connected them all. Prime effectively sits in the center of everything. It's the bridge between liquidity providers, treasury systems, and corporate clients. When a business uses Ripple payments, Ripple Prime can source the liquidity. When a custodian needs collateral for settlement, Ripple Prime provides it. And when RLUSD moves across networks, Ripple Prime ensures it clears compliantly. Behind the scenes, XRP still plays a quiet but essential role. It acts as the bridge asset inside Ripple Prime, linking fiat, RLUSD, and tokenized assets on the XRP ledger. When institutions trade or move liquidity, XRP helps balance those transfers instantly without holding risk in each currency. It's the mechanism that makes this entire network liquid. The big idea here is convergence. Ripple spent years building the individual components: custody, compliance, tokenization, and liquidity. And with Prime, those parts finally come together into a single ecosystem that resembles a modern digital bank, only faster and more transparent. Now, for those newer to crypto, here's why this matters. Traditional banks move money through pre-funded accounts and delayed settlement systems like SWIFT, which can take days. Digital assets move instantly but have struggled with regulation and trust. Ripple Prime blends both worlds. It gives institutions the speed of crypto with the oversight of banking. And because RLUSD is a regulated stablecoin held with a U.S. custodian, it fits cleanly into compliance frameworks that banks and funds already understand. For Ripple, this move also positioned them for the future of tokenized assets. By 2025, the conversation around tokenization wasn't theoretical anymore. Bond funds, private equity, and even real estate were beginning to issue tokenized versions of their products. Ripple Prime became the logical place to trade, finance, and settle those assets. That also made Prime a natural extension of Ripple's partnerships with platforms like Securitize and Tokeny, which were already issuing tokenized securities on the XRP ledger. With Prime, those assets could be traded, collateralized, and settled through one institutional channel. There's another layer to this story. When Ripple acquired Hidden Road, it also absorbed a deep pool of data and connectivity. Hidden Road had already integrated with major exchanges, liquidity hubs, and traditional clearinghouses. That meant Ripple Prime could instantly operate across multiple markets, sourcing liquidity in crypto and fiat simultaneously. It was essentially plug-and-play access to global liquidity. For institutions, that changes everything. Instead of relying on multiple intermediaries, they can move between asset classes without friction. It's not just efficiency, it's evolution, the way financial systems adapt when technology finally catches up to their needs. You can also see the timing. By the time Ripple Prime was announced, Ripple was already in the process of acquiring G-Treasury, which will get its own video later in this series. G-Treasury connects 13,000 financial institutions and corporations to real-time cash and liquidity systems. So while Ripple Prime focuses on institutional trading and settlement, G-Treasury brings corporate cash management into the same network. Those two pieces together form the complete bridge between banks, funds, and enterprises. What Ripple essentially did was replicate the structure of a universal bank, but built entirely around blockchain technology. Ripple Prime is the investment and trading arm. Ripple Payments is the transaction layer. Ripple Custody and Treasury are the balance sheet and risk management functions. Ripple RLUSD is the settlement currency. And Ripple X is the developer platform that keeps it all interoperable across networks like XRPL, Ethereum, and beyond. If you look back over this whole series, you can see how it all lines up. From the early days of Algorand and Tranglo to the Metaco and standard custody acquisitions, every step built toward this. Ripple Prime was not an accident. It was the logical outcome of half a decade of acquisitions designed to give Ripple complete control over how money moves, is stored, and is traded globally. Now let's talk about the regulatory implications, because this is where Ripple's advantage becomes clear. And here's the key insight. Ripple Prime isn't just another division. It's the core layer where Ripple's ecosystem meets the wider financial world. It is where RLUSD stablecoin liquidity meets institutional demand. It's where tokenized assets meet real-world capital. And it's where banks and corporates gain access to markets that used to be fragmented across dozens of intermediaries. To put it simply, Ripple Prime represents the final bridge in Ripple's master plan, the point where every piece connects into one fluid financial network. So what's next? For now, Ripple Prime is still in its integration phase. Ripple hasn't officially launched the public brand yet, and some of the finer details like exchange connectivity and product tiers are being tested internally. But make no mistake, the direction is clear. Ripple Prime is designed to serve the biggest players in finance, and its success will likely determine how far Ripple can go in merging blockchain infrastructure with traditional markets. We'll cover what comes next in future videos, including Ripple's G-Treasury acquisition and the global expansion of its treasury and payments network. Each move brings the company closer to becoming a full digital financial institution. This channel is for educational and entertainment purposes only and is not financial advice. Always do your own research and keep the discussion respectful. If you enjoyed the video, please consider liking, subscribing, leaving a comment, or sharing it with a friend.